Good morning and welcome back to Almus Market Mornings, your daily dose of global financial updates. The Fed minutes are out and it discussed rate cuts and pace of quantitative tightening, both of which are closely being watched by the market participants. Just to make our listeners recall, major central bankers have been pushing against markets' timing with respect to a rate cut. In December, we were observing high probabilities of a rate cut in March. This slowly shifted to May and now stands somewhere around the June meeting. Good morning, JK. Your thoughts on the recent Fed minutes? What's your take?
Good morning, Swaraj. Yeah, before we get on to the minutes part, it's been a historic day in the markets, particularly in the stock market, as the Japanese benchmark Nikkei share average has passed all-time closing high in intraday trades. So we don't know where it is going to close, but definitely it has touched a level that was seen 34 years back. As we all know, Nikkei has been aided by the easy money policy and also highly depressed yen that is used in carry trade. In another contrasting picture, the Chinese shares are, still struggling, although it did make a few days of gains. China has banned major institutional investors from reducing equity holdings at the open and close of each trading day. And it's part of their forceful attempt to prop up the nation's market. That's the 8.6 trillion stock market in the China. Then, of course, a lot of nerves in the market yesterday ahead of NVIDIA's numbers, but again, they beat estimates and forecasts massively. Revenue ended, to a record 22.1 billion versus 6.05 a year earlier, and also they gave a much better than forecast expectations for Q1. So NVIDIA shares rallied 7% in aftermarket trades, and then futures in Nasdaq are showing good positive. So that's where the markets are. And let me not miss out this Indian equity index Nifty also touched a new all-time high yesterday, although it did lose out most of its gain later part of the day. But yes, that's also some record that we saw yesterday. Now on to the economic news. Yes, the Fed minutes was the major focus of the markets in the absence of any major data. And the 2 points that emerged was that most of the participants noted risk of moving too quickly to ease stance of policy and the importance of carefully assessing incoming data. So the data-dependent approach that Powell has been saying about. And then something that the market could take heart from was, in light of the ongoing reductions in the US use of RRP facility, the reverse repo facility, participants suggested that it would be appropriate to begin in-depth discussions on balance sheet issues. Basically, the reduction in QT program, what Powell once again hinted last meeting, is being talked about in the minutes as well. But overall, the tone of the FOMC minutes was quite neutral and no surprises there at all. Therefore, market did not react to that. Rather, the bond yields moved up after the tepid response to 20-year fresh bond issuances of 16 billion by the Treasury, which actually was higher by 3 bps than what the market was earlier expecting. Yields have moved 5 to 7 bps in across tenors after the the issuance as well as on the Fed minutes also. And another data, of course, the Philadelphia Fed manufacturing activity showed further decline, printing minus 8.8 versus 3.7. And it showed that the prices paid actually fell 4 basis points. So that's some good news for inflation watchers. The conference board's leading indicator economic index also fell once again, and that was again a negative number, but the board actually said that the US economy will not be getting into a recession as earlier they were saying. There wasn't much of a news from other regions yesterday. So the stock market, of course, as I mentioned already, yesterday it was in the negative territory, but today it has got a good momentum on the upside. All the Asian equity indices are up. On the dollar, again, notable feature is that despite yields gradually moving up, and good news from US economy, various numbers that we have seen on the higher side. We have not seen dollar react on the lower side at all, or rather on the upside at all. It's not been able to build up the gains. Rather, euro, for example, has now been building a base above 1.08. We observed yesterday how the Eurozone's current account has seen a very good surplus of 31 billion euros in the month of December, and taking the full year surplus to over 250 billion euros, contrasting with 200 billion of deficit that the US is running. So the structural picture of the region is what the market is looking at. And of course, euro assets are underowned, and I think this is what is coming into play. The cyclical factors, monetary policy, and the uh, monthly data is something that the market is not giving much importance to. But of course, the euro, to make real headway, we need to break above 1.09, and that's when we will get some momentum on the upside. But definitely, the downside does look limited. Yen, as we have been saying, staying above 150. We have to see whether Japanese officials come back and do some passive intervention like they did in the earlier occasions. Chinese yuan holding below 7.20 now. Again, waiting for more measures from the authorities than what they have already done. GBP seems well supported because of the you know, indications from UK MPC that the rate cuts are not going to happen as early as the market is thinking, but the direction is down. As far the rupee is concerned, there was a decisive move to 82.90 yesterday, traded below that as well. But then PSU banks stepped in again, mainly for oil companies, and then other importers also jumped in, and we saw the rate squeeze back to 82.97, once again proving that the downside looks limited, despite the large flows that we have been seeing, and despite the dollar index looking a bit weak. So rupees range trading still continues. We have continued to watch the key levels at 80 to 70 and 83.20 for getting any bigger direction. Thank you.
Thank you, JK. And the major theme, of course, is that equities continue rocking. Japanese benchmark stock index has touched all-time highs, a level seen almost 34 years back. And the contrasting picture is, of course, from China, where the equities continue to struggle. Even our very own Indian equity benchmark index has also touched new record all-time highs. When it comes to Fed minutes, the 3 points which I can summarize it quickly is data-dependent approach, warning against too quick rate cuts, and a possible in-depth discussion is expected on the quantitative tightening pace. The other data is Fed's Philly manufacturing index, which showed further declines. Prices paid fell, which also gives some comfort to the inflation watchers. And as JK mentioned, dollar has not been able to keep the gains, while euro has been basing below 1.08 levels, possibly supported by the current account surplus. When it comes to rupee, we traded briefly below 80 to 90. PSU banks, Oilers kept the pair well supported despite large flows and weak dollar index. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.